Hi guys, a very good afternoon. My name is Shahz Faruqi. Today is the second webinar, which it's the continuation of the webinar that we had yesterday. And the objective of this marathon is to quickly run you through the FM syllabus. Now, again, I hope the objective is clear. Okay, the objective is a quick revision of the entire syllabus. That is the objective, right? And yesterday we had completed about half of the syllabus in the marathon yesterday. And today we're going to look at the remaining half, where we're going to look at the risks, where we're going to look at certain very important concepts that a lot of people don't understand. Okay, so again, this is my name. For those of you who want to stay in touch, can reach out to me over here and can message me on WhatsApp on this number. A lot of students who are interested have already started reaching out to me with their doubts, with questions, and all of that. So you can always reach out to me and stay in touch. All right. Anyway, moving on. All these topics we covered yesterday. Today, I'm just going to put this in the same list because it's a continuation of yesterday's marathon. And today I'm going to do risk. There are two risks which we should be aware of: foreign exchange risk and the interest rate risk that we are going to complete. I had somebody who asked me specifically for risk yesterday, and I had somebody who asked me specifically for business valuations yesterday. I had somebody who asked me especially for capital structure as well. So, all of that we're going to look at today. All right. So, let me jump straight into the material. And I'm going to talk about exchange rate risk. Okay, and as you know, I am going to be doing few things that people find challenging, few things that people find difficult. That is what I'm going to do. And of course, on demand, if anybody has anything that they want me to look at, I will look at that. Okay, so again, in this marathon, we are running you through the core, the important, the things where people struggle. Again, in ACCA, there is no such thing as important topics, but there are those topics where people struggle, right? So I am directly going to jump to those topics. All right. So one topic which people generally suffer with is hedging. They, unfortunately, even the ones who go to institutes don't really understand hedging fully. They have problems with hedging, right? So let's get started with hedging. The current spot rate for US dollars against UK sterling is 1.54525. Okay, so this rate is given, correct? Tell me one thing, how many of you feel that you are confident with test your understanding 7? How many of you feel that, okay, I know test your understanding 7, I can work on this? I have no problems at all with test your understanding 7. Abdur Rahim is okay. You don't have problems with test your understanding 7. Hedging in both interest rate and exchange rate, people suffer. I don't know why. And again, you see what is happening 2 weeks ahead of the exam, and we have one person who is comfortable with this test your understanding. Unfortunate. Very unfortunate. So, anyway, let me get started. I will explain this to you, where we're talking about if the forwards exchange contract is used, how much will be received in sterling? Always ensure that you read the question first. And this is so easy, but still people don't understand. Say you people are witness. I'm asking how many of you can do this? Nobody except for Abdul Rahim is saying yes. So test your understanding. Sorry, test your.
Hello, this is Ravdat Nomin, your Bengali interpreter. My ID is R as in Romeo, U as in uniform, 427. How can I help you today?
Okay, I had to put you on mute. So test your understanding 7, chapter 13. Yes, I think so. Great. So. Right now, the spot rate for US against US dollar against the pound is $1.452 is £1, and the 1 month forward rate is quoted as 1.455 to 1.4565 is equal to £1. A UK exporter expects to receive 400,000 in 1 month. Look, first of all, what is the basics? I am getting 400,000 amount due in 1 month is $400,000. All right. But where am I sitting? I am sitting in the UK. So this $400, I want to know how many pounds will I get in the UK, right? Today, the exchange rate is how much? Today, the exchange rate is 1.4525 to 1.4535 is £1. But, 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 after a month, we don't know what the exchange rate will be. The risk is we don't know what the exchange rate will be after 1 month. And I'm getting this amount when after 1 month. So I don't know what the exchange rate is going to be. And that, my friends, is the problem. So what do? We agree on a rate today, forward rate. In the future, we agree on a rate. This forward rate is how much? The forward rate is after 1 month is 1.4550 is to 1.4565 is £1. Now, this is one area a lot of students, even 3 days before the exam, are not clear. The question is which rate to use? If I want to convert these dollars to pounds, which rate will I use? Will I use 1.4550 is £1, or will I use $1.4565 is £1? Which rate will I use is the question, which a lot of people don't understand. They buy hard. They go like bank buys less, bank buys more. What does bank do? It's they've all learned rules. They don't understand concepts, which is a very big problem. Here, what is happening is this. See, you will be getting what? Dollars. So you have what? Dollars in your hand, right? So think about it. The scenario is you have dollars in your hand. And you will need pounds. Now, the bank is a very smart person, or the exchange rate guy is very smart. You know what the exchange rate guy will say? You have dollars and you want pounds. So he will tell whatever you have is weak because he wants his benefit. No? He's telling, oh, you have dollars, is it? He'll say dollars are very weak. Pound is strong. Why? Because he knows you have dollars and you need pound from him. So he will say dollar is very weak, boss. Pound is strong. So what he will say, dollar is weak, meaning it means that you need to have more dollars. Let me give you an example. I'll give you one more example, and this will be crystal clear forever. Raj and Rahul. Raj is weak. Rahul is strong. Okay. Raj and his team is weak. Rahul and his team is strong. All right. Now, if there is one guy, what is this guy's name? His name is John. If Raj and his team are weak and they want to hit John, they want to beat John, but they are weak. What does this mean? Because they are weak, more people from Raj's team will be needed to hit one John. Because they are weak, we need more people. Because they are weak, we need more people from this team to beat John. Otherwise, John, nothing will happen to him. But Rahul and his team are strong. If they want to beat John, because they are strong, even two guys or even one guy from Rahul's team can easily beat John. Why? Because they are strong. Are you understanding? Similarly, coming back to this example, the exchange rate guy is saying dollar is weak. The exchange rate guy is saying dollar is weak. So when will the dollar be weak? Dollar is weak when you need more dollars to hit 1 pound. See, dollar is weak. I need to send 1.4565 Mr. Dollars to beat 1 Mr. Pound because he is weak. So we need more dollars to buy 1 pound. So whenever dollar is weak, you need more dollars to buy 1 pound. Just like how whenever a guy is weak, you need more guys to meet one guy. But suppose the dollar is strong, even less dollars can easily beat 1 pound. So this is the logic, technically speaking. So what is happening is here, because you have dollar in your hand, how do I know? Dell has asked me, how do I know we have dollar in hand? Because the question is telling you 1 month down the line, you will be getting $400,000. So I know 1 month down the line, I have $400,000. So with those $400,000, I will go to the exchange rate guy to get pounds. But the exchange rate guy is over smart. He will tell you whatever you has is weak, whatever you have is weak, whatever he has is strong. He will tell you, since you have dollars, he will tell you dollars are weak. So when is dollar weak? Dollar is weak when we need more dollars. So basically, he is asking you to give more dollars to give you 1 pound. See how over smart he is. He is telling you, oh, I need more number of dollars, not less dollars. You have to give me more dollars so that I can give you 1 pound. Therefore, the rate you will use is this, right? And at that rate, the conversion will happen. So the conversion will happen at which rate? $1.4565 is 1 pound. Therefore, the conversion will happen at this rate. So when you have $400,000, okay, what do? You have $400,000, but when you convert it to pounds, what will you do? Each dollar, $1.4565 is equal to 1 pound. So you divide this by 1.4565 is equal to how many pounds will you get? 400,000 divided by 1.4565, which is how much? 400,000 divided by 1.4565 is 274,630. So these many dollars you will get after 1 month. Guys, I hope everybody is clear with this. There is no problem. Now, do you believe that you are confident with Test Your Understanding 7, all of you? Quickly, fast. Let's play fastest fingers first. Quickly, let me know. Fast. Everyone. You understood the logic, how the exchange rate guy will decide what exchange rate to give you. You understood? Yes or no? Everyone type. Abdurrahim, Nitesh, Del, Aditya, Bhavya, Deepika, Nikita, Yash. Is this clear? The logic? Nobody has a doubt? Okay, can you give another example? I'll give you one more example. Because I think you people are having a problem in the how does the bank buy and what does the bank. Anyway, I'll just elaborate on that. This example will explain everything. Listen very carefully. I've been asked by Nitesh and by Del. So test your understanding 3, chapter 13. Because after this, guys, we're going to go to foreign exchange hedging, which a lot of them, most of them don't understand the logic. They buy hard, they mug up, and then they fail and come. So ACCA is all about understanding. Whoever tells you practice, and does not talk about understanding is misleading you. Understanding is very important. I'm sure if you've done any ACCA paper, you will agree with me. But anyway, let us continue. The US dollar rate per pound, this is the rate that is given, 1.4325. Company A wants to buy 100,000 in exchange for sterling. So let's just assume we are company A. Company A wants dollar. Needs dollar, US dollar. So let's assume we are going from company A to do the exchange rate, to do the exchange. Right? See, when company A wants US dollar, the bank, what will the bank say? Oh, you want US dollar. The bank is very smart. Company A knows that they need US dollar. Company A will go and tell this to the bank that I need US dollar, I will give pounds. The bank will be over smart. The bank will say, oh, you need US dollars. He will say, but US dollar is very strong. Why? Because he knows that you need it. And he knows that he has US dollar. So all these rules people teach you, bank buys high, bank sells low, but it's of absolute no use. You will find yourself sounding a little silly when you say this if you don't understand the logic. Okay. Bank knows that you need US dollar. So purposely the bank will say, oh, but US dollar is very strong. So when will US dollar be strong? Again, which is strong, guys? 10 guys are needed to beat John, or 3 guys can beat John. Which scenario guys are more stronger? Scenario 1 or scenario 2? In which scenario the guys are stronger? All of you type. In scenario 1, we need 10 guys to beat John. In scenario 2, 3 guys can beat John and come. Very good. It is scenario 2 where the guys are stronger. Abdurrahim, think again. Which scenario are the guys stronger? It is scenario 2. Abdurrahim, again, think about it. If you need 10 guys to beat one guy, imagine the strength of those 10 guys. 10 guys are struggling to beat one guy. But in scenario 2, Abdurrahim, easily 3 guys can beat John. So the second set of boys are stronger. The third set, for the sake of Abdurrahim, I'll give you the third set of guys. One guy can beat John. Out of these 3 set of guys, which guy is the strongest? 1, 2, or 3? Abdurrahim, this question is for you. Very good. Again, Deepika, you're making the same mistake. See, Deepika, you understand Hindi? Deepika, do you understand Hindi? Yes, Deepika, first scenario में 10 लड़के जाके एक बंदे को मार के आएंगे, 10 लड़के. बट थर्ड सिनेरियो में क्या है, एक लड़का काफी है. सो खुद सोच के देखो कौन से सिनेरियो में लड़का स्ट्रॉन्गर है, जहां पे 10 बंदों की जरूरत है या एक काफी है. कौन से सिनेरियो में स्ट्रॉन्गर है? सिनेरियो 1 में 10 आदमी की जरूरत है. मतलब वो जो इंडिविजुअली जो 10 आदमी है, दे आर नॉट वेरी स्ट्रॉन्ग, इसीलिए हमको ज्यादा से ज्यादा लोगों की जरूरत है. One guy only, yes, correct. So it is, we are talking about what? We're talking about in which case are the guys strongest. In the second case, the guys are strongest. Similarly, coming back, you need dollars. Company A wants dollars, but what is the bank smartly doing? Bank is smartly saying US dollar is strong. Now tell me, in which scenario, using this logic, see and tell me, in which scenario do you think US dollar is stronger? In which case is US dollar stronger? In which rate is US dollar stronger? $1.4325 can easily buy 1 pound, or we need $1.4330 to buy 1 pound. In which scenario is US dollar stronger? First scenario is where easily just fewer dollars can beat 1 pound. In first scenario, yes, very good. So it is US dollar is stronger at this rate. So in this case, the bank will use this rate. The bank will use the rate, but the bank will use is rate used by the bank will be $1.4325 is equal to 1 pound. Now let us look at company B. Company B is selling dollars and company B needs the pound. Company B needs pound. Company B is saying, I will give you dollars. You understand? So now bank is over smart. What will the bank say? Bank will say, oh, you need pounds, but pound is very strong. So now what is bank saying? Bank is saying pound is strong. Why? Because you need that and he has it. He will say whatever he has is strong. So now think about it. The rate used by the bank in this scenario will be, again, looking at this example which I made, in which case is pound stronger? In which scenario is pound stronger? When you need 1.4325 guys, just 1.4325 guys can beat 1 pound, or you need more guys to beat the pound. In which scenario will the pound be stronger? Scenario 1 or scenario 2? Where is pound stronger? This is pound. I will again, if you want again.
Scenario 1, sir.
I will repeat it, okay? One last time. Very good, Del. It is scenario 2. But think about it. Nitesh, in one scenario, 4 guys can beat me. You need 4 guys to beat me. And in the second scenario, we need 15 guys to beat me. Okay, let me change the word. In the first scenario, 4 guys can easily defeat me. In the second scenario, we need 15 guys to defeat me. In which scenario you think I'm stronger?
Scenario 1, sir.
What do the others feel? Again, Nitesh, hear very carefully. In one scenario, we need to send 4 guys to come and beat me. 4 guys can easily come and beat me in this. But in the second scenario, you have to send 40 guys to beat me. Without 40 guys, without 50 guys, nothing will happen to me. I will destroy them. You need 50 guys to beat me. Let me change the example again. The example is there is a wall. 2 scenarios are there. In one scenario, you have to break the wall only once and the wall will fall. And in the second scenario, you have to break the wall 16 times and only then the wall will fall. Where is the wall stronger? One time breaking or 16 times you have to hit the wall for the wall to fall. Which scenario is the wall stronger? 16 times.
16 times, sir. 16
Same
times.
way, similarly, using the same exact logic, where is the pound stronger? The pound is stronger when you need more dollars to beat 1 pound. Are you understanding, Nitesh?
Yes, sir.
Deepika, are you clear? Where is the pound stronger? Pound is stronger when you need more dollars to buy 1 pound. Deepika, clear?
Sir, actually, in this scenario 1 is the when the pound is weaker.
Okay, okay,
Second
just
scenario,
type it. Just type it. I'm not able to hear you. Quickly, just type it. Okay, so I hope this is clear. Okay, so I will give my own set of examples because it's unfortunate that test your understanding 3 of this chapter itself is not very foundationally strong to a lot of you. So I will again give you some examples to explain. But in this case, the bank will use which rate? Bank will use $1.4330 as 1 pound is equal to 1 GBP. I'll spend in the next 5 minutes in giving some more examples for this. And then hopefully by then you should be clear in confidence. First and foremost, strength and weakness. You are strong when you need more people to defeat you. Abdullah Niaz, we're looking at risk. We're looking at exchange rate risk. And in the next 5 minutes, we're going to move to hedging. Okay, you are strong when you need more people to defeat you, or you can easily beat more people alone. You are weak when easily few people can beat you, or you need more people in your team to beat one guy. Forget FM. Let's just talking about guys beating. Right? Now I'll give you a rate. You have to tell me where is the dollar stronger. in this scenario, where do you think the dollar is strong? $1.5 to $2 could be 1 GBP. But in which rate? Is it $1.5 or is it $2 where the dollar is strong? Again, before you answer anything, you need to know that dollar is strong when lesser dollars, fewer dollars can beat more pounds. So in this case, very good, Nitesh. Dollar is strong when the rate is $1.5 is 1. I'll give you another example. 22 to 24 AED is equal to 1 Indian rupee. AED UAE dirham. Where do you think is the Indian rupee strong? This is foundational, unfortunately. Very, very good. Nitesh has understood this. So I'm not worried about Nitesh anymore. Where is the Indian rupee strong? Everybody think and tell me. Quickly, fast. Quick, 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 quick. You can just don't worry about what others are answering. Just you put your answer. Where is the Indian rupee strong? Indian rupee is strong when we need more dirhams to beat 1 Indian rupee. See, again, Trisha has made a mistake. Trisha, again, think about it. When is Indian rupee strong? Indian rupee is strong when we need more dirhams. Again, I'll give the example of the wall one more time. Trisha, this is a wall. In scenario 1, you have to beat the wall 5 times to break it. And in scenario 2, you have to beat the wall 50 times to break it. When will you say this wall is strong, Trisha? In scenario 1 or in 2? This question is only to Trisha. Where will you say the wall is strong? When will you say what? Yes, 2. Same way, Trisha. Where the question is, where is the Indian rupee strong? When just 22 dirhams can buy 1 rupee, or we need more, we need 24 rupee dirhams to buy 1 rupee. Where is the dirham stronger, Trisha? Very good. Now let us go back one last time to this test your understanding and see if everybody is able to solve it. Okay. Again, company A wants to buy US dollars. Wants to buy US dollars. So the situation is we need dollars. So obviously it means we have pounds. In this case, the bank will say whatever you need is strong because bank has it. Whatever you have is weak. So bank will say, oh, you need dollar from me. Dollar is strong. And now in one quick, I'll count backwards. 5, 4, 3, 2, 1. Once I count to 1 and I say 0, everybody should enter the answer together, okay? In which rate is the dollar strong? I'm going to count backwards. Is it $1.45325 is 1 pound is strong? Where is dollar strong? I'm going to count backwards. Once I go to 0, you enter the answer. 5. Keep the answer ready. Don't type it. 5, 4, 3, 2, 1, 0. Type the answer. Quickly, everyone. Very good. Excellent. So in this case, when the company A wants to buy $100,000, we will use this exchange rate. versus look at company B. Company B wants to give dollars and buy pounds. So the bank is over smart. Bank will say, oh, you want pounds from me. Bank will say, okay, pound is strong now. Because the bank is over smart. Bank is whatever you want, bank is saying that is strong. Whatever you have, bank is saying that is weak. So again, I'm going to count backwards. You have to tell me at which exchange rate pound is strong. Is it $1.4325 is 1 pound or $1.4330 is 1 pound? Okay, I'm going to count backwards. 5. Once I say 0, everybody enter together. 5, 4, 3, 2, 1, 0. This means you all have understood this concept. Now you will always be in a position to say where is the exchange rate strong, where is it weak. So even if we were to go back to hedging, even if we were to go back to test your understanding 7, you will be in a position to answer. Now I want all of you to do test your understanding 7 again, but on your own, where in 1 month we're getting 400,000 and this is the exchange rate. We are getting dollars. Those dollars we want, so we will have dollars. So we have what? We have dollars. But we need what from the bank? We need sterling from the bank. So now you all have to take 2 minutes and tell me what exchange rate will we use in this case. What exchange rate should we use in this case? We have pounds. Sorry, we have dollars. Yes, guys, that is absolutely right. So we have what? We have dollar. So the bank will say dollar is weak. So we have to give more dollars to buy 1 pound. All of you are right. So I hope this concept is clear. I hope everybody is absolutely comfortable. Okay. Everybody comfortable? Nobody has problems? Okay, guys. Yes, sir. Thank you very much for giving this topic time. Okay. So I hope this is comfortable. I hope nobody has any issues at all. And now you will easily be able to do test your understanding 1. You will easily be able to do test your understanding 2. It's all easy now for you. Okay. So what I am very keen on doing is interest rate, where we look at hedging. Okay, that is a topic that I definitely want to do. We're talking about hedging a payment. Okay, now this is a topic, believe it or not, I am very sure, with all due respect to everybody present, if this has been a problem, this I am sure I will have a sizable audience who does not understand this. So that's why I'm going to do that now. And this is a topic that will take some time, but if you understand, it's very easy. Look at test your understanding one and tell me if you know what to do, if you know the logic of this, if you know how this works. Tell me how many of you will be able to confidently do this? Abdur Rahim feels the concept is weak. What about others? Let me know quickly, real fast. Guys, again, we don't have so much time. So you don't have a lot of confidence. Del, in this concept, you don't have confidence, correct? Yes. So I will do this real fast. Test your understanding 8. How do we do this? Money market hedge. Pawan has given some answer, but he's not quite sure. I also have to check the answer, Pavan, and then accordingly I will tell you. Maybe that's not correct because from what I can see here, I don't think that's correct. Anyway, let us look at what a money market is. Thakur Company, a UK company, must make a payment of 450,000 in 3 months' time. The company treasurer has determined the following. As of now, the spot rate is right now, the exchange rate is $1.7 to $1.7040 is £1. But what is the problem? First, we need to identify what the problem is. Problem is the money is receivable, not now, in 3 months. And the danger is we don't know what will be the exchange rate in 3 months' time. Okay, that is the problem. Okay, moving ahead. Decide whether a further forward contract hedge or a money market hedge should be undertaken. Okay, so how do we do this? What do we do? See, I'm getting 450,000 US dollars in 3 months. Right? Money is payable. Oh, yeah, we have to pay the money. Okay. The money is payable in 3 months' time. In 3 months' time. we must make a payment in 3 months' time. So what I will do is, I will deposit $450,000 today in the US bank. Why today? Because today I know what is the spot rate. So what I'm doing is, I will deposit 450,000 US dollars in the US bank today, so I can make payment in 3 months. Okay. However, think about it. When money is sitting in the bank, it earns us interest. You agree with me? When we put money in the bank, that money earns us interest. So I don't need to put 450,000 in the US bank. I realize that money deposited in the bank will earn me interest. In 3 months, I only need 450,000. I don't need more than that. So what I will do is, I will deposit lesser than 450,000, so that with interest earned, it will become 450,000 in 3 months' time. All of you understood what is happening here? I repeat again, I need to pay 450,000 after 3 months, right? So I will put 450,000 US dollars in the US bank today itself. But suddenly I have a realization, and my realization is, well, I will earn interest. So instead of depositing 450,000, I will deposit a lower amount, so that with interest, it will become 450,000 in 3 months' time. Is everybody understanding? Yes or no? Type this, please. Fast. Yes or no is what you have to type. Fast. Others. Very good. Now what happens? Think about it. In the US bank, when we deposit money, it earns us 5% interest. Okay. So as of date, this is simple math. Okay. I'm doing the calculation separately. Annual interest in the US bank is 5%. So monthly interest is how much? 5% divided by 12. How much is 5% divided by 12? Because there are 12 months. 5% divided by 12 is how much? 5% divided by 12 is 0.00 something. So the monthly interest is 5 divided by 12. It is 0.416%. 7%. If the monthly interest is 4 months, I want to know what is the interest for 3 months. It is going to be 0.416667 into 3. Therefore, 3-month interest will be 1.25%. Okay, now it goes to simple math, guys, basic math. The 3-month interest is 1.25%. So whatever it is, I will deposit X amount. This is the 3-month interest. I have to deposit X amount. I don't know how much that amount is. It is X. But I will earn interest of how much? 1.25% of X. So I will get 1.25% of X. So 1.25% of X is 1.25 divided by 100 is 0.0125. 0.0125 times X. This is how much I will earn. X plus this, that is the deposit amount plus the interest amount, has to be equivalent to 450,000 because I need 450,000 after 3 months. So the amount that we need is 450,000. So now you work your way backwards and you can easily find out how much is the X amount using simple math. X plus 0.0125x 0.0125x is equal to 450,000. So 1.0125x is equal to 450,000. Simple maths now. X is equal to 450,000 divided by 1.0125. Therefore, X, the amount that needs to be invested today, is 450,000 divided by 1.0125. Therefore, the amount that we have to put in the bank today is 444,440. This is the amount I have to put in the bank today. We will earn interest and that amount will become 450,000 after 3 months. Very good, Abdurrahim, you're right. So 444,000. I realize that money deposited in the bank will earn me interest. Blah, blah, blah. I will deposit it lesser than 450,000 so basically, based on the calculation, I must deposit $444,444 in the bank today. Therefore, because after interest, it will become 450,000. So this is the amount of money that I need to deposit in the US bank today. So that is the first part of the question. So point number 1, 2, 3 talks about the first part of the question. However, the second part of the question is, this is part 1 of the question because it's a big part. Generally, whenever there's a question with too much calculation and all that, I break it into parts. Part 1 is over. I know how many US dollars I need today to put in the bank. But part 2 is, again, these many US dollars.
It's 5 o'clock.
Pounds is it today? That is, I know I need $444,444 today, but I am sitting where? I'm sitting in UK. So in terms of pounds, how many pounds do I need to transfer today in US dollars? And therefore, I need to take the spot rate. Are you understanding? So this part of the question says that since we need 444,444 US dollars today, how many GBP should I convert? Do I need to get $444,444 today? So I use today's spot rate. And if I use today's spot rate, I'm putting the calculations down. If I use today's spot rate, think about it, guys. Using the knowledge and information that I gave you before, I need dollars. So the bank will say dollar is strong. Therefore, which rate will I use if the dollar is strong and the pound is weak? Which rate will the bank give me? Using the knowledge that I gave you before, let's see if you're able to do this. I need $444,444. Which rate should I use? Everybody, which rate will I use if the dollar is strong? Quickly, everybody. Very good. Now everybody has understood it. Therefore, I will use 1.7000. How many pounds will that be? 444,444 divided by 1.7 is 261,438. These many pounds I need today. Okay, so I'm going to put this in green so that it's easy. I need I need 261,438 pounds. 438 pounds today. Now that you have understood how many pounds you need today, do you have so many pounds today? The answer is no. You don't have so many pounds today. Okay, I'm putting the problem in back. You don't have so many pounds today. So what will you do? You borrow today. Where will you borrow from? Where will you get pounds? You will get it from the UK bank. So we will borrow money from the UK bank. So think about it. The rate for borrowing is 7.5, but that is the annual rate. So using the same calculation, you can find out the 3-month rate. 3-month borrowing rate. Same calculation. Again, I don't want to break my head or bore you too much with the same thing again and again. But real fast, if I have to, annual interest rate is 7.5%, which you have to pay. Therefore, the monthly interest rate will be 7.5 divided by 12, how much ever that is. How much is it? 7.5 divided by 12 is 0.625. 0.625. Therefore, 0.625 3-month interest will be 0.625 into 3, which is 1.875. So the 3-month borrowing rate is 1.875. You borrow today at an interest rate of 1.875. You have borrowed at this rate. Therefore, how much will you pay to the UK bank after 3 months? The amount you will return to the UK bank in 3 months is the original amount plus 1.1875%, which in simple math is going to be 261,438 into 1, which is the original amount, plus 1.875%. 1.875% is 1.875 divided by 100, which is plus 0.01875. Therefore, you need to multiply this 261,438 with 1 point. See, 1 plus 0.01875 is equal to simple maths 1.01875. So the amount that you will repay to the bank in 3 months' time is how much, guys? Who can tell me? 266,340. Very good, Pawan. I believe that is not the answer you got last time. 266,340. This is the amount of money that you will pay in 3 months' time. Okay. Therefore, Thakur knows that in order to pay this amount in 3 months' time, I will need to pay a total of 266,340 pounds. You understand? So basically what we are doing is this. What we're trying to understand is very, very simple. Basically, in order to get $450,000 in 3 months' time, I am paying 266,340 pounds today. So it's like I have hedged or I have created my own exchange rate using this activity. And therefore, what happens is this. What happens is, again, 450,000 US dollars divided by 266,340. How much is 450,000 divided by 266,340? I am getting a rate of 1.689. All right. What I mean is, based on what I have created, I have myself created $1.689 is equal to £1. This is the rate I created. I hedged on my own using these tactics, meaning that in 3 months' time, I'll get I'll pay 450,000. But for that, today I'm paying 266,340. So if I divide it, I will get the rate which I created. You understand? Compare that rate with the rate which you would have used if you didn't do this hedging. Suppose if you didn't do this hedging, in 3 months' time, which would you have used to buy US dollars? In 3 months' time, you have to make a payment in US dollars, correct? In 3 months' time, which rate would you have used? You need US dollars, so the bank will say US dollar is strong. So you would have used this rate, correct? I hope all of you are understanding. If you didn't do this exercise, if you didn't do anything of this, and after 3 months, you want to give pounds to get dollars so that you can pay dollars to a US customer, after 3 months, this is the rate. You would have entered the bank and you would have said, I want US dollars. The bank says, you want US dollars, I have US dollars is strong. At which rate is US dollar strong? At this rate, US dollar is strong. Where if you didn't do the hedging, you would have had a rate of $1.6902 is £1. You understand? So, which is a better rate you have to see now? This or this? The rate that you created or the rate which the bank is giving you after 3 months? Which is a better rate? The created or the hedged rate, or the rate which the bank is giving you after 3 months? What do you think so? You are giving GBP to buy dollars. Correct? So here there is a problem. In order to understand this, you need to just do a simple calculation. What is that simple calculation? In 3 months' time, if you want 450,000 at this rate, how much will you pay? You will pay 450,000 divided by, what is the rate? 1.690. 1.690. So in 3 months' time, how much would you pay? How much is 450,000 divided by 1.6902? 266,241. So let me put this way, okay? This number. So by doing the hedging, amount paid is in GBP is how much? 266,340. I have the proof here. This is the proof. I'm putting it in a bracket. I'm putting it in green color. By doing the hedging, I am actually paying only how much? 266,340 pounds. See, I got that answer. 266,340 pounds. By doing the hedging, I have to pay only 266,340 pounds. But without the hedging, how much will I pay? The amount paid in GBP is how much? It is 266,241,000. Sorry, is it 266, 241,000? Just excuse me, let me just check that again. Yes. So tell me, where is it cheaper? To do the hedging, if you do the hedging, you will pay 266, 340. If you don't do hedging and you just wait, you will pay 266, 241. So you see what you've understood and what you've realized is even without hedging, you are paying lesser. With hedging, you are paying more. So you will decide not to hedge. You will decide not to do the hedging. Are you all clear with this? Is this 200% clear? This entire problem? Hedging, test your understanding 8. Quickly type it in the chat. Quickly, guys, let me know fast. Is your understanding better now? Compared to before, is your understanding better? Quickly, everyone. Okay, let's move on. The next chapter altogether. So you can hedge a payment, you can also hedge a receipt. But with the logic of hedging a payment, you will automatically be good with hedging a receipt, which is exactly the opposite. Conceptually, it is the same. Okay, so conceptually, I hope everybody is crystal clear and happy. Just have a look at this. We now look at interest rate risk. A lot of you had asked for interest rate risk. So we will do that right now. We've looked at exchange rate risk. We've looked at exchange rate problems. Only the difference in borrow and deposit. Yes, Rahim. Bhavya, can you show me the calculation of borrowing again? Where borrowing? This one. Is it this calculation that you're looking for? Is it this one? You can go through it. You can go through swaps. You can go through futures. All that you can do. Yes, why you did 1.875? 1 plus interest. What 1 plus interest? It is interest rate is 7.5. 7.5 divided by 12 is 0.625. That into 3 is 1.75. So the percentage 3-month percent of borrowing is 1.875 because this 7.5% is the yearly interest rate. Okay, now comes the next topic, which most people struggle with and most people don't have a very good understanding and idea, is types of share capital. Again, this is on demand. Whatever you want me to look at, these are the steps, Bhavya. All of these are the steps. I've typed it step by step. Part 1, in fact, I've broken the question into two parts. Have a look. Let me know if there's a problem in you. Okay, we can look at these problems. value of a rights issue, all that I can look at. Probably we can look at shareholder options. We can look at, because all these are things are where people, again, numbers, numericals, people don't understand. So I'll do those things and then we can move to we will move to the next topics. Okay, so let's go ahead. Point 2, point 3, can you explain again? Where point 2, where point 3? Which part? Part 2, point 3 is what? Part 2.3. Okay, the amount you will return to the UK bank in 3 months is 261,438. See, you need what? When it comes to the basics, okay? Since I need $444,444, I use today's spot rate. So meaning according to today's spot rate, I need 261,438 pounds loan today. So I'm taking a loan of 261,438, but the interest rate is also there. In 3 months, I have to pay an interest rate. Interest rate of how much? I have to pay an interest rate of 1.875%. So when I repay to the bank, I will repay 261,438 into 1 plus 1.875%, which is 266,340. To arrive at 1.01875, what did I do again? Why did I arrive at it's simple math. See, Bhavya, either what you can do is if you're borrowing a loan of 261,438 and you're borrowing at a rate of 1.875, how will you know how much amount you will return? You will return the principal amount, which is 261,438. This amount you will return. Plus, you will return the interest. Interest is 1.875%. 1.875%, Bhavya, in simple maths, 1.875 divided by 100 is 0.0875. Sorry, not 0.0875, 0.01875. 1.875% is 0.01875. So you will pay interest of 0.01875 into 261,438. Do you agree with me, Bhavya? Because the principal amount is so much. So, okay, got it. I didn't saw the percentage. Where percentage? This is not percentage. I've already taken the percentage into consideration. But anyway, 0.01875 into 261,438. 261,438 into 0.0. Understood? Yeah, thank you. So now let us move on to this topic, which is talking about TERP, value of a right. Is this easy to everybody? Because if it's easy, I'll not do it, because we need to make sure that we are doing those topics which everybody wants, people are not comfortable with. So is anybody having issues with these topics, or do you want me to like do this TERP, rights issue, value of a right, shareholders options? If you're okay, if you're easy, I'll not do it. I'll skip. Let me know. Everybody. Abdurrahim is weak. What about others? Test your understanding 1, 2, value of a right, shareholders options. Are you weak or you are strong with it? You can tell me, please don't sit and just be silent. Let me know so I can help you accordingly. This is interest rate risk, yes, 10. Is it okay? Shareholder option, Nitesh is weak. Okay. Okay, so let's anyway do it. So while you test your understanding 1, 2, maybe test your understanding 1 and test your understanding 3, because test your understanding 2 and 4 is the same logic of 1 and 3. Then I'll go to shareholder options. Okay, so what do I have? Test your understanding 1. Babelco has an issued capital of 2 million, having current market value of $2.7 each. Makes a rights issue of 1 new share for every. See, first of all, what is a rights issue? Rights issue is where we are selling shares of a company to existing shareholders at a discounted price per share. This is a rights issue. So the existing shareholders of FinChartered Academy, I will sell to them more shares at a discounted price. That is a rights issue. Okay. Now this company is doing a rights issue. Now, what do I mean further by test your understanding 1? We have issued share capital of 2 million already. Okay. Now we are making a rights issue. What did I say rights issue is? Rights issue is where you are issuing more shares at a discounted price. And what is the rights issue? The rights issue is 1 new share for every 2 existing shares. Meaning the ratio is half. The new shares issued, number of new shares issued. What is the number of new shares issued? I am giving 1 share for every 2 existing shares. So if I have 2 million shares, then how many new shares will I issue if I'm issuing 1 new share for 2 every existing shares? Basically, I'm saying for every 2 students, I will give 1 very good tip, 1 chocolate. So for 10 students, if I have 10 students total, how many chocolates will I give? The ratio is 2:1. So the number of chocolates I'll give is 10 divided by 2, which is 5. Similarly, using the same logic, the number of new shares issued is 1 million shares. So the total number of shares after the rights issue becomes 3 million. I hope this is comfortable, clear, happy to everybody. Spend a minute in that. 1 minute spend on that. See if everything is okay. Perfect. Now, what is it that we are looking at? What I want to know is after the new issue of shares, as of now, the market value of each share is 2.7. All right. And once we issue the new shares are issued at a price of 2.1, because I told you rights issue is issuing shares at a discounted price. So Let's do the calculation. Let's do the math. Initial value of the shares. I had 2 million shares. Each share had a value of 2.7. So 2 million into 2.7 is how much? What is 2 million into 2.7? 5.4. I want everybody to give answers faster. 5.4 million. Now, the new shares, value of new shares issued is how much? How many shares am I issuing? I'm issuing 1 million share. Each share has a value of $2.1. Therefore, the value of the new shares is 2.1 million. Therefore, the total value of the shares is 5.4 million is the value of the old shares. 2.1 million is the value of the new shares. Therefore, the total value of the shares is 7.5 million. 7.5 million is the total value of the shares. The total number of shares is how much? Total number of shares now. Before I had 2 million shares. Now I've issued 1 more million shares. So the total number of shares is 3 million. Therefore, what the X rights price is trying to do is find out the new price per share. TERP is the new price per share after the rights issue. Meaning, after the rights issue, the total value of the shares is 7.5 million for a total number of shares of 3 million. So if I do simple calculation, if I do simple math, 7.5 million is the total value of the shares. Total number of shares is 3 million. Therefore, 7.5 million divided by 3 million is how much? It is going to be 7.5 million divided by 3 million. Very good, Abdul Rahim. It is $2.5 per share. So after the rights issue, the new price per share is $2.5. This is the theoretical X rights price. This question also I'll break. I've already broken into 3 parts. There's the blue part where we're trying to figure out what is the new number of shares, total number of shares. Then comes the second part of the question where we are looking at what is the total number of shares. Now that we know the total number of shares and the total value of the shares, this is total number of shares. Total number of shares I know the total value of shares. Therefore, blue part, red part, we will divide. I know the total number of shares, I know the total value of shares. Therefore, TERP is the new price per share after the rights issue. So TERP is the total value of the shares, which is denoted in red, divided by the total number of shares, which is denoted in blue. Which is 7.5 million divided by 3 million. TERP is 7.5 million divided by 3 million, which is 2.5 per share. You all said that you would appreciate help in this topic, which is why I've done this. So the TERP is 2.5 per share. Is this clear to all? There is no problem at all. Everyone comfortable with theoretical X rights price? Quickly let me know. Yes, that's it, Abdul Rahim. It's very simple, correct? You said you are weak in this, that's why I did this. Is this comfortable to everybody? Theoretical X rights price? Quickly let me know. Yes or no? Now, let us move ahead to test your understanding 3. So we've looked at test your understanding 1. From which chapter? Chapter 15, sources of finance. Now we're looking at test your understanding 3. What is test your understanding 3 looking at? What is the value of a right in Babel? Okay, so what is the value of a right? How do we do this? Value of a right is this. See, go back to Babel. In case of Babel, the theoretical X rights price, that is after the issue of the shares, the value of each share is 2.5. So it's like value TERP is 2.5. This is the new value of the share after the rights issue. But you must appreciate and understand the existing shareholders are getting the same share for $2.1. You understand? So the TERP is $2.5, but the issue price is $2.1. Therefore, the value that the existing shareholders are getting is they're getting something worth $2.5 for just $2.1, meaning they are having a value of $0.4. The value per share is $0.4. I hope that is clear. Part B of the question, what is the value of the right in Babel Co per existing share? So the value per share is this. But part B of the question is asking what is the value of the right in Babel Co per existing share? See, the value of a share is just, excuse me. So the value per share is 0.4, but the question is asking you the value of the right per existing share. Per existing share means for each, basically you are basically giving one new share for every 2 shares. So the value per share per existing share will be 0.4 divided by 2, which is 0.2. So they already have 2 shares, right? For 2 shares, we are giving you 1 extra share. You agree with me? According to the question, we are giving you 1 new share for every 2 existing shares. So you're getting something worth 0.4, but you get something worth 0.4 for 2 shares. So for each existing share, it will be 0.4 divided by 2, which is 0.2. So test your understanding 1 and test your understanding 3 are over. I hope there is no problem because it's a very simple test your understanding. It's a little, I'm a little, you can say, not disappointed, but I'm just, I wish I could help you more. I wish I could help you earlier. I wish we could have started this earlier because this is very simple. Let us now close this chapter by talking about test your understanding 5. Okay. Using the information in test your understanding 1, a shareholder B had 1,000 shares in Babel Co before the rights offer. Calculate the effect on the net worth of B with each of the following options. See, shareholder has 4 options. What are the 4 options? Either take up the rights or renounce their right. Renounce their rights means sell the rights in the market. Or sell a part of the rights and keep a little bit of rights. And 4 is do nothing. You will understand this better with test your understanding 5. In the first option, we are taking up the rights. Look at the question. The question says, using the information and test your understanding one, a shareholder B had 1,000 shares in Babel. Now, the question says that we are making a rights issue of one new share for every existing 2 shares. Right? So think about it. We are issuing 500 new shares. 500, why? Because we had 1,000 shares and the company is issuing one new share for every 2 shares. So 1,000 divided by 2, the number of new shares issued is 500. So if he takes up the shares, the number of shares will go up. Will be, he originally had 1,000 shares, plus he now got 5,500 shares. So he has 1,500 shares. Okay. Each share after the issue of the new share, I told you what is X rights price. For now, just ignore cum rights price. I told you what is the X rights price. X rights price is basically after the issue of the new shares, each share, what is it worth? Each share is worth 2.5. So I have 1,500 shares. Each share is worth 2.5. So 1,500 into 2.5 is how much? 3,750. So this is the wealth that he has. But remember, he is also losing a little bit of wealth. Amount paid to obtain new shares. What do I mean by this? In order to get the 500 new shares, he needs to pay how much? $2.1. We agreed on this. Each new share is issued at a discounted price of $2.1. So for the new shares of $500, Mr. B has to pay $2.1. So how much is Mr. B paying? 500 into 2.1. Is 1050. So he is paying 1050. Therefore, his net wealth, see, I'm putting whatever is coming in green and whatever is going out as an expense in red. So the net wealth that he has is 3750 is coming in, 1050 is going out. So what is his net wealth if he takes up the shares? 3,750 minus 1050. His net wealth is 2,700 if he takes up the shares. The other option is if he sells the right to the shares. If he sells the shares, then what will happen? If he sells the rights, remember, each right has a value of $0.4, which he can sell it for. He can get $0.4 by selling the shares. So if he sells the shares, meaning he is not taking the new shares, the number of shares he has will only be 1,000 because he is not taking the new shares. Each share has a value of 2.5. So 1,000 into 2.5, he will have $2,500 worth of shares. But because he is selling shares, amount earned by selling the shares, the new shares. How many new shares did we have? 500 new shares. Each share could be sold at a profit of 0.4. So 500 into 0.4 is 200. So this is also 2,500 he is earning. This 200 also he is earning. Therefore, the net wealth will be 2,500 plus 200, which is 2,700. You understand? So in this case, the wealth is 2,700 if he sells the rights. Third is if he doesn't do anything. Neither is he taking up the shares, nor is he selling the shares. In that case, what happens? Doesn't do anything. He has how many shares? Number of shares are 1000. Each share is worth 2.5. So he has shares worth 2500. So his net wealth is worth 2500. So tell me which option is better for Mr. B? Do nothing, or take up the shares, or sell the shares? Which option is better for him? There are three options which I'm highlighting in blue. If he takes up the shares, he has a wealth of 2,700. If he sells the shares, he has the option, he has the wealth of 2,700. If he doesn't do anything, he has wealth of 2,500. So which is better for him? Take up the shares or sell the shares or don't do anything? Which is better? Dell says first and second. So we will not do anything because that is not good for us. Either we can take up the shares or we can sell the shares. But think about it. If you sell the shares, yes, you will be worth 2,500. If you take up the shares also, you will be worth 2,700. If you sell the shares also, you are worth 2,700. If you take up the shares also, you are worth 2,700. But if you take up the shares, you will have 2,700 plus you will have extra shares in hand. Those shares will help you become wealthier because you have more shares. If that is invested in a positive NPV project, it will help you earn more money in the future. See, first option, second option, in both cases, you're getting the same amount of wealth. But first option is better because the amount is same, yes. But in the first option, you have more shares. With those shares, if that money is invested in a positive NPV, in future you will get more money. But if you sell the shares, you'll not get that money. So if you ask me, the best option for Mr. B is to take up the new shares. I hope this is clear to everyone. With which this chapter also, major topics, numericals are done. Just see if there's a problem in test your understanding 5 and see if your understanding is very strong for this. See if it's crispy understanding. Everybody type. Everyone, others, please let me know. We have other people like Nitesh, Bhavya, Yash. Come rights price, right now there is no use of it. As of now, there is no use of come rights price. Ignore it for now. So X rights price is the share price. Here at this level, it is the new share price after X, after. Okay, come rights price, I will introduce it to you in a later chapter. But again, numerically, that's it. A few people have problems with lease. Lease is basically renting. Okay. And the lease period itself can be broken into two parts, primary period and secondary period. In the primary period, you have to pay the rent no matter what. In the secondary period, you can terminate the rent. Again, just basics on this. All right. Anybody have issues with dividend policy, theories of dividend policy, dividend irrelevance theory, residual theory, dividend relevance? Anybody has, this is all theory. This entire chapter is theory. Anybody has a problem with dividend policy chapter? I can help you if you want, but this is a topic which is easy. Whoever has a problem, let me know problem. Please do it. Okay, fine. So yes, let's get started. The theory of dividend policy. Again, because it's a theory chapter, I'm just putting it as one heading. What is dividend irrelevance theory? See, what are dividends? Dividends are the profits that the company gives out to the shareholders. As a business, as a shareholder, I want to receive dividends. The first theory says that whether a company gives dividends or reinvests the money does not matter, because ultimately the wealth of the shareholder remains the same. I will explain this to you with an analogy, and I hope you will never forget this in life. And then once I explain, but suppose there's a well. I gave the same example in my regular classes also. Suppose there's a well. Okay, now I'm drawing a well. Suppose there's a well and there is water in the well. Either you can take out the water, you can put it in a jug, or it will stay inside the well. Now you tell me, if you are the owner of the well, it honestly does not matter to you much. Either you will have the water in your hand or it will stay inside your well. Nobody is stealing it from you. Nobody is taking it away from you. Either it will be in your hand or the water will be in your own well. So it doesn't matter to you whether the water is taken out or whether it is kept in the well. That is what dividend irrelevance theory says. It says, according to, as per dividend irrelevance theory, put forth by M&M, Modigliani and Miller, what we are saying is shareholders don't mind whether dividend is paid or the money is reinvested in the company. Why? Because the wealth remains the same. Either they get it in hand or the other option is what? Either they get the money in their hand or the other option is what? The other option is that money or the money is reinvested further, which will help increase the wealth of the shareholders. This is the dividend irrelevance theory. It's a theory, so you cannot argue and say, oh, but this, oh, but that, because this theory got its own set of criticism. So you may disagree with it, and if you disagree with it, you are not the first person to disagree with it. But this is what the dividend irrelevance theory says. Whether you take the money out or whether you reinvest it does not matter to shareholders, because ultimately the company belongs to them. That is what is the dividend irrelevance theory. I hope that's clear. All right. Then comes residual theory. What is residual theory? I hope dividends irrelevance theory is clear to everybody. Residual theory is what? Residue in simple English is leftover. Residue is leftover. This is where this theory says that dividends should be given after money is reinvested in all positive NPV projects. After investing in all positive NPV projects, whatever is left over, whatever is residual, if you still have any leftover profits, that money should be given in the form of dividends. Once the firm has invested in all positive NPV projects, should dividends be given? This is what residual theory says. I hope that is comfortable and clear. However, we need to know ultimately that dividends are very important and dividend policy is very important, because if the company does not give dividends, it gives a wrong impression, or it conveys a message to the shareholders that maybe the company is not performing well. I understand. This is dividend itself signals, right? Imagine your uncle, every month he sends you pocket money, but suddenly he stops. What will you think? You will think, oh, is my uncle fine? Is everything okay with him? Is his job fine? Is his business fine? Why he is not giving me now? Similarly, dividends, not giving dividends or reductions in dividends conveys to shareholders bad news, potentially bad news. Okay, and sometimes, a lot of times, as much as we say, oh, it doesn't matter whether you give me dividends or whether you reinvest, a lot of investors will prefer liquidity. What do I mean by prefer liquidity? They want money in hand. They want to get dividends so that they can pay their expenses, so that they can take care of their needs. If you don't give them dividends, they will lose interest. Right? Third is what? Changes in dividend policy may upset investor tax planning. If you change the dividend policy, it will affect their taxes also. They will not be able to plan their taxes. So, as much as we say that dividends are not relevant, we are also saying that it is very important. So now somebody will ask me, sir, just now you said it doesn't matter whether you give dividends or whether you reinvest. Now you are saying dividends are important. This is not what I am seeing. These are all theories. One theory said that it doesn't matter. I'm just teaching you what other people told. One theory says it does not matter what dividends are given out, because either it is given out or it is reinvested in the business. It doesn't make any difference. Residual theory, I just mentioned what it is. And then comes dividend relevance. I know I'm seeing you for the first time. Please make sure that you watch the recording on YouTube. We are uploading all these marathon recordings on YouTube. So if you've missed anything, you can watch it on YouTube. Okay, this is what dividend relevance says. Okay, I hope everybody is clear with that. Okay. Then comes scrip dividends. What is scrip dividends? Scrip dividends is where the company gives dividends to its shareholders. But it doesn't give cash. It gives more shares in the company as dividends. As dividends. Now, many people get confused and be like, oh, sir, is this similar to rights issue? No, sir, it is not similar to rights issue. In rights issue, we are giving shares, we are selling shares at a discounted price. Here, you are not selling shares, you are giving shares in the form of rightful dividends. In rights issue, I'm selling new shares to existing shareholders. If they want, they will buy. I'm selling it to them at a discount. Scrip dividend is not, I'm not selling new shares. I am giving new shares in the form of dividends, or rather, instead of giving dividends, I am giving new shares. I hope you understand this well. Right? Just make a note of this. Guys, is this clear to everybody? Scrip dividend, what it is? So with this, we've also completed the 16th chapter. So guys, out of 20, how many? 21? Chapter 20 chapters. In this marathon, so far I've already completed 16 chapters. All right. Guys, one thing I wanted to let you know is we have decided to, based on demand, also have one marathon on Friday, which will be our last marathon. Okay. So on Friday, we will be quickly completing 17, 18, 19, and 20. And then on Friday, majorly, Abdurrahim, yes, based on your request, I'm scheduling this. Majorly on Friday, we will do exam kit questions. So before that, make sure you watch all the recordings. But unfortunately, today, I will stop now because of some issues that we faced of late here. But
It's
we
6
will
o'clock.
catch up on Friday and we will do our 4-hour marathon on Friday. No, there will be no lecture tomorrow as such. This is a marathon. Technically speaking, Trisha, by doing 2 hours of marathon, another 2 hours, 8 o'clock we had the marathon. It was actually an 8-hour marathon, 4 hours on Monday, 4 hours on Tuesday. But what I have done is, today I've done 2 hours. So basically 6 hours are over. But instead of giving you 8 hours of marathon, I'm giving you 10 hours of marathon. 6 hours are already over. 4 hours I'll do on Friday. Understood, Trisha? So it'll be 10 hours so that I'll be able to address everybody's needs. Okay, guys, whoever wants to reach out to me, whoever has questions, whoever has doubts, whoever has suggestions can message me on WhatsApp. And people have already started reaching out to me for September sitting. So please, my first suggestion would be to focus on your June exam. But whoever is interested for September sitting, yes, reach out. Let me know your names. Let me know you will be interested so that we can make arrangements. Okay, this is my number. And as I said, you can connect with me on LinkedIn as well. We will have a marathon on Friday so that it takes the marathon duration from 8 hours to 10 hours. But that is all for today, guys. I hope everything was clear and comfortable today. Can you share your feedback, thoughts, ideas, suggestions? Overall, how is the experience? Overall, how is it helping you? Overall, are you able to understand concepts better than before? Quickly type. Yes, Trisha, I hope I've answered your question about tomorrow's marathon. Again, technically speaking, today the marathon would get over, but nothing tomorrow, only on Friday. Whoever is interested in PM can join tomorrow. Tomorrow is PM's marathon. And as I said, whoever is interested for September can reach out. Just let me know your names. All right, you can otherwise also message me on WhatsApp if you have any questions and clarifications. Okay, thank you so much, guys. You can leave.